Grant off Chapter 3, Budgetary Accounts. Purpose: these are used to record the budgetary inflows and outflows estimated or authorized in the annual budget. Accounts include estimated revenues, estimated other financing sources, appropriations, estimated other financing uses, encumbrances. Let's look at budgetary and operating statement accounts. Revenues and other financing sources increase fund balance when closed. Both are recognized on the modified accrual basis when measurable and available to pay current obligations. Expenditures and other financing uses decrease fund balance when closed. Both are recognized on the modified accrual basis when incurred, if expected to be repaid from currently available resources. Now these are operating statement accounts: revenues, other financing sources, expenditures, and other financing uses. Operating statement accounts. Next we look at budgetary accounts. An appropriation is a legal authority granted by the legislative body to incur liabilities for purposes specified in the Appropriation Act or ordinance. It's the legal authority to spend. An encumbrance, another budgetary account, is an estimated amount recorded for purchase orders, contracts, or other expected expenditures chargeable to an appropriation. Basis of accounting: neither GASB nor FASB have control over budgeting principles. Budgeting principles are directly set either by the government or organization or the one that supervises them. The GASB recommends using modified accrual basis accounting for the budget. However, for the budget, most governments use cash basis, so this does lead to a reconciliation. Cash basis budgeting. Governments use cash basis budgeting to assign revenue and expenditures to the period with which the cash is expected to be received or disbursed. Cash basis budgeting treats encumbrances equivalent to actual purchases. Cash basis budgeting recognizes taxes and other revenues in the year in which they are due and not in the year in which they are expected to be collected. So this is cash basis, allowed and used for budgeting, but it is not used for GAAP, for financial statement preparation. Disadvantages of cash basis: this may distort the economic impact of planned fiscal activities. This may be unbalanced as to economic cost and revenues. It may give an appearance of a budget that has achieved inter-period equity when it really has not. This makes it easier to transfer resources from a fund that has a budgeted surplus to one that needs extra resources. This complicates financial accounting and reporting. Now let's take a look at the current GASB model, our statement number 34, the dual perspective, the dual purpose, versus the old model. The old model, governments reported only their amended budget, and the budget will be changed throughout the fiscal year. The current model, based on GASB Statement 34, requires the actual results in both the original and the final appropriated budgets. So the user sees what the original budget was and then what the end final appropriated with the amendments budget is. Budgetary compliance can be assured by building safeguards into the accounting systems. Legally adopted budgets versus GAAP-based financial statements. Differences arise between the legally adopted budgets and the GAAP-basis financial statements, caused by basis of accounting, timing, perspective, and reporting entity.